Well, I think it tells you he likes energy because despite the fact that he's been selling Chevron for, I think, 4 or 5 quarters in a row, he keeps adding to Occidental Petroleum. I also think it's a good lesson, not so much about what sectors he's in, right? I don't think Warren Buffett really thinks about it in that way. But it's one thing for sure, he's holding on to his Apple. You know why? Because they're a cash flow machine. He's holding on to his Bank of America. It's his second large position. Why is he doing that? Why isn't he trimming that? Well, I'll tell you why. Because next year, if we get the bond rally the way everybody expects, their net profit, their net interest margins are going to go up and everybody's going to be very happy. So I think don't necessarily read into the sectors, but just more of where he's concentrated positions and where he's really focused. He is focused on energy. And I think that that is a key thing going forward. I also think I want to point out that back in August of 2020, he started buying these Japanese trading companies. They're called Soga Shoshas. And what they do is anything that they can make a buck off of trading from here to there, commodities, software, food, TVs, they do it. And I bought a little bit with Buffett, because it's a great way to follow a stock is to, put $5,000 into it and see what happens. And my analyst was telling me last night, he's like, we made a lot of money on these stocks. It's like, why didn't we just load the boat? Well, tell me about it. But we don't get that in the 13F because 13Fs don't show us international positions. So I think the real story is what the 13F doesn't tell us. And that is free cash flow, moving things from one place to another, and good quality companies, you go out 3 to 5 years and you're guaranteed to make money. So remember, it's all about those Japanese trading things. They're good valuations. They create free cash flow. It's a classic Buffett move. That's what I think the big story is.
So a win for Buffett, a win for you, at least when it comes to some of the holdings in regards to Japan. But Lee, what about the fact that Berkshire Hathaway is sitting on a record cash pile? Does that signal anything to retail investors?
Yeah, he should. It means be cautious. He doesn't see any screaming deals. I was talking with some people yesterday about how, the forward 12 blended month forecast on the NASDAQ is 28% growth or something ridiculous. A lot of that is based off of the AI bump this summer. It's based on a game to lose, not a game to win. Buffett likes good companies that you can buy super cheap. And so I think going into next year, if things were so easy, why isn't he getting that cash invested? I think he sees trouble next year. I think we see that valuations, once we get a little bit movement on interest rates, could make things interesting. And honestly, it's just hard to find good companies at a reasonable valuation. The fact that he's going to Japan to find things with a PE that's reasonable, I think tells us a lot about this market.
Lee, he didn't make changes to 4 of his top 5 holdings: Apple, Bank of America, which you touched on there, Coca-Cola, and American Express. Of those, any that you would own heading into 2024?
Yeah, let me tell you, Apple, come on. If you own the S&P, you own a bunch of Apple. So I think that's a company that's kind of, it's the poster child for a big monopoly. Nobody talks about their little hedge fund. Nobody talks about how Apple doesn't pay its suppliers till 60 days after they sell the product. We've never had a company like that. But it's a big part of the S&P, so I think that's something that you can hold. Bank of America, I can't believe I'm admitting that I own Bank of America. What a dog this year. But I'll tell you, when you think of Apple, that's like his S&P 500. When you think of Bank of America, that's his large cap value. I think those are the two winners of those two indexes. As far as Coca-Cola or American Express, Chevron, I'm ho-hum. If I wanted to own 3 things going forward, I'd probably own Apple, I'd own some Bank of America, I'd own some Occidental, and that's a great concentrated position, right, in those 3 names. But really, they represent sort of the broader markets and my philosophy that going into next year, you're going to have to barbell it between the real cheap value stuff like the B of A's, Bank of America, and the things that you just can't stop the growth, which let's represent with Apple. So that's an alternative to doing an index fund, right? Just buy the big winners and hope that Buffett knows what he's doing.
He's also a historical buyer of Disney, and you've got some interesting perspective on Disney as well, as you're shaking your head here. Go ahead, just give it to us.
I think Disney has structural problems going forward. I carried water for that company. It was my biggest loser since the lockdowns. And it's not just I'm upset about losing money. Hey, listen, stocks go up and down. I sat on those Japanese trading houses for 3 years before I really made the big money on it. The problem with Disney is when I look at my child and other children, there's so much more competition for content. When I was growing up, Disney was a premium thing. We all waited for things that they own now, like a Star Wars. But Star Wars doesn't have the moat. Marvel is losing its moat. And you see these Disney adults, but I'm looking at where are the Disney children? And so I think when you talk about Disney Plus and all that streaming, forget about it. I know Parks had a good quarter, but Parks, I believe, are on a decline because there's just too much competition and it doesn't have the magic that it used to. Therefore, my thesis that Parks can always raise prices, that's gone. And because of that, I'm out of the stock. Hey, let somebody else try it in the 80s. Good luck to you. I hope it works out. I got other things I got to do.
Lee, that's a lot to unpack there. But let's start just with some of the changes, though, that Iger has implemented. We haven't given him too much time just in terms of what that turnaround strategy could potentially have Disney looking like in 2 to 4 years from now. Do you see any of those ideas that have been laid out from Iger over the last year potentially changing some of that momentum?
I hope so, but I don't really think it's going to move the needle. I don't think the things that he's talked about are really exciting me and think to myself, do I want to double down in the 80s after losing 30-40% over the last few years when it was a layup? I think the fact that, people say, oh, he brought in the CFO because he was part of his old team. No, when you have to have, quote, the greatest CFO in corporate America come in and run this company, I think that's a problem. This should be an easy company to manage. You have everything you want. You have the brand of the last 100 years. The problem is, it may not be the brand of the next 100 years. I think you have to wait on Disney. Never say never. I may be here a year from now, maybe the stock's in the 60s, and I think, it can work. But the fact that all of our hopes and dreams are riding on one guy who couldn't stay retired bothers me.